London, Reuters, world stock markets nosedived for a fourth day running on Tuesday, having seen $4 trillion wiped off from what just 8 days ago had been record high values. Euro trademark's main bourses started down as much as 3%, leaving investors with little option but to seek the traditional refuges of gold, the Japanese yen FRX/ and one of the initial triggers for the sell-off, benchmark government bonds. Wall Street futures offer a chink of light as they turned higher, but commodities suffered too, with oil and metals all tumbling backwards as what had been one of their best starts to a year also soured rapidly. A euro era playtime is officially over, kids a euro analysts at Rabobank said. A euro era's volatility painfully reminds some investors that one-way bets don't a euro trademark T exist a euro. The stock sell-off had been viewed by some as a healthy correction following their rapid rise over the last year, but, as it snowballed through Asia and then Europe, nerves were starting to fray. Wall Street a euro trademark's Dow Jones and S&P 500 benchmarks had slumped 4.6% and 4.1% on Monday, their biggest drops since August 2011. It was also the Dow a euro trademark's biggest fall on a pure points basis of all time. Europe a euro trademark's early drop sent the region a euro trademark's stock 600 to its lowest level in 6 months. There was intense trading activity, with more than 40% of the average daily volume traded on Germania euro trademark's DAX and Europe a euro trademark's stocks 50 by 8:45 GMT. Tide turning. A euro Ezenki last autumn, investors had been betting on the a euro Goldilocks a euro trademark economy, solid economic expansion, improving corporate earnings and stable inflation. But the tide seems to have changed a euro, said Norihiro Fujito, senior investment strategist at Mitsubishi UFJ Morgan Stanley Securities. In Asia, MISI a euro trademark's broadest index of Asia-Pacific shares outside Japan slid 3.4%. Taiwan a euro trademark's main index lost 5.0%, its biggest since in 2011, and Hong Kong a euro trademark's Hang Seng index dropped 4.2%. Japan a euro trademark's Nikkei dived 4.7%, its worst fall since November 2016, to 4-month lows. The original trigger for the sell-off was a sharp rise in U.S. bond yields late last week after data showed U.S. wages increasing at the fastest pace since 2009. That raised the alarm about higher inflation and, with it, potentially higher interest rates. That could be painful for markets that have been propped up by central banks a euro trademark stimulus for many years. The 10-year U.S. Treasuries yield rose to as high as 2.885% on Monday, its highest in 4 years and up 47 basis points since the end of 2017. But a massive fall in share prices prompted an about turn, and on Tuesday, it fell back to as low as 2.662%. German bonds, Europe a euro trademark's equivalent benchmark, then fell 5 basis points in early trading, their biggest drop in over 2 months. Only 2 Fed hikes? U.S. interest rate markets are now pricing in only 2 Federal Reserve rate hikes this year, a big shift from only a few days ago when they were pointing to 3 or even 4 hikes. The CBOE Volatility Index, the closely followed a euro fear index, a euro measure of expected near-term stock market volatility, jumped 20 points to 37, its highest level since August 2015. That left some popular exchange-traded products that investors use to benefit from calm market conditions facing potential liquidation. Keen to avoid further risk, investors are closing their positions in other assets, including the currency market, where a popular strategy has been to sell the dollar against the euro and other currencies seen as benefiting from higher interest rates in the future. The euro was sold off on Monday but popped back up to $1.2435 on Tuesday. It took it away from last week a euro trademark's low of $1.2335. That could usher in a further correction after its rally to a 3-year high of $1.2538 late last month. Against the yen, which is often used as a safe haven currency because of Japan a euro trademark's solid current account surplus, the dollar slipped as much 0.2% to 108.86 yen before clawing back to 109.3. Oil prices also dropped, with international benchmark Brent futures hitting a one-month low before recovering to stand at $67.28 per barrel, down 0.5% on the day. U.S. crude futures traded at $63.87 per barrel, down 0.6%, while safe haven gold was up for a fourth day in the last 5 at $1,340 per ounce.